Hello, and a massive hello to everybody. How we all doing? Okay, rocking and rolling in a free world. Here we go. It's 29th of December, 2017. No trade calls, no recommendations. Everybody's sponsored for their own stuff. We're here for educational purposes only. As always, all the sessions are recorded. You'll get an email recording as soon as it's over. As long as it's for your own personal use, nobody will block, nobody will be banned. We'll all behave as one big happy family. So what's going on, guys? Here for a little end of year review, and nothing's really off the table. Anything anybody wants to look at, we can talk through. As long as it's on the platform, we can review it. So just shoot, don't be shy, use the Q&A, let me know, and I'll try and get through as many charts as we can. So first things first, keep in mind today can be a little bit of a funky day, right? Going into the end of the year. So don't worry too much about what happens today. Now, in terms of the year, what's happened? Well, the year I think has been a fairly interesting year. A lot of interesting moves, but all things being equal, fairly boring if you think about it in terms of volatility, right? I think one of our biggest calls this year, which we were clearly wrong on, is that we expected a lot more volatility to eventually kick in. What we kept on saying throughout the year was that we expected before a close below 9, we expected to see some kind of a pop in the high teens through the 20s, possibly higher, and that just never materialized, right? So clearly wrong on that, but not going to change our mind. The longer it takes to happen, the more violent we believe it will be when it finally happens. So that's that. Going into this year, I think a lot of people are going to be focused on how we trade in January. Now, in terms of the last day of the year, keep in mind that in the more recent past, usually NASDAQ and ES have actually closed down on the last trading day of the year, but we'll have to see what happens. As we go into January, a lot of people are going to be thinking about January effect in Euro, the fact that Euro may put in a yearly high or low, swing high, swing low in January. A lot of people will be focusing on the January barometer in stocks, basically, looking at the fact that, majority of the time, Januaries that have closed down on the S&P were pretty much always any January that has closed down on the month on the S&P has preceded a new or extended bear market, and that especially people focus on what happens on the 5 first trading days of the year, right, which tend to give us a feel of how the year could trade or how things could materialize. But as always, we prefer to just focus on the charts, focus on the levels, and take things one level at a time, right? One chart at a time, one level at a time. Yeah, exactly. I think here we can go through Forex, we can go through the ETFs, we can go through the futures, anything. Really don't hesitate to ask. Market's open, so if you're looking at anything you want to review live, we can look at that live. If not, we'll just look at some of the bigger themes. I'm just going to start and drill down here on our watch list and just go through a bunch of stuff. First of all, URA. This has been a trade we've been talking about for a long time. This has been a swing long for us, and basically it's the uranium ETF. We've been looking at this to try and move back up into what we call neutral territory. I'm not going to go through the discussion on all the fundamentals on it, but basically, our base case has been for the whole year and back end of last year. As long as these lows held, we're looking for at the very least to move back into neutral into the 20s. And this hasn't changed. I know a couple of people wrote in asking what the view for this year is. Absolutely nothing's changed. This is still a rotation in play. Our base case is neutral, is moved back into 20. A primary target on a breakout of the 20 is 40. And what we would call an extension target is a move back into the 70s on this. It's a very big, very long swing trade. You need to be patient on these. Okay, so nothing much has changed on that. We've talked about it a lot on the blog too. Apple, what's going on in Apple? Well, our base case is that Apple has topped here, at least short term. They're always tricky calls, but what we're looking at here is, and you'll see this with a lot of these tech names, they're really hovering around this 50 moving average. So we can just put the 50, the 200, and the 100 back up on the chart just to help give people a little bit of guidance, right? And our base case is that this, basically the 176s, we've seen a topping pattern here. And any move back down, this is a false break higher. We couldn't take out the 176s. Any rally here for us is an interesting asymmetric sale, unless you're already short, to look for this to move back towards the 165s at the very least. Here, in terms of day closes above or below the 50, is going to be an interesting bull bear line. Don't try and read too, hey Debbie, how's it going? Don't try and read too much into what happens today. But basically, as the key thing here is this whole area is very choppy, but as long as we hold these highs, we think the next pivotal level, the next area where serious business has to be done is that the 165s, and the 165s are going to tell us whether we're going to continue this rotation higher just with a healthy correction, or if it's time to see a bigger correction back into the 156s, and then we'll have to see what happens. But our base case, especially if we get a little bit of a correction in the equities, is that we could be looking at that correction back into the 200. So no big change for us on Apple. And this is a similar kind of dynamic on a lot of the tech names. If you look at Amazon too, through these highs, our base case was that we're going to come back into the 1084, and that was going to be the pivotal level for a retest of the 1000 mark. Right here, it's still hovering. It's very choppy, these highs, but as long as this level doesn't get taken out, we think there's a good chance that at the very least we'll test the 50. But this is a very similar pattern across a lot of the tech names, right? And you'll see that. So also, if you're looking at something like, maybe let's look at Facebook, you see how it's stuck hovering at this 50 DMA, looking for direction. So clearly, if it can get stabilized and start to close back above, this could be back to those highs. But I think there's a very good chance that we see the bigger rotations down into all these pivotal levels through the 50 DMAs and towards the 100s across the board on a lot of these tech names. One of the, and of course some are heavier than others, right? You can see also on Tesla, this is very, very heavy. Our base case hasn't changed since the topping at the 383s. We're still looking for this to come back down into the 270, 240 range, right? That absolutely hasn't changed for us. Constructive action here to the downside. Where's NVIDIA? See NVIDIA back below. We had the very nice shorts here back into this pivotal level. Now it's holding below the 50. And again, this is a pivotal line. Is it going to manage to get traction, or are we going to continue back towards the 100 and back lower? So it's a very, very similar action across the board on all of those tech names. So again, if there's any tech name that you want to review, just let me know. I have no problem. We have plenty of time to go through those. In terms of the equities, what's going on here in this on the Aussie? If you remember on this Aussie here, we've got also this is tying in with some of the gold seasonals, but our base case, we discussed this in detail, was that especially after this failure to hold below the 100, even if this was ultimately going to rotate lower, we felt there was a very, very good chance that we'd come right back up off these lows and test the 77s, and that was going to be the pivotal level for either a retest higher or a retest lower. So you see, as long as this is holding above this 77, this looks like it's a rotation back higher, and whether you want to talk about themes for next year, which, a lot of people, some people are going to be saying long dollar, some people are going to be saying short dollar. Our base case is still, we're more leaning in the camp. And again, I prefer to look at one chart at a time, but we're more leaning in the camp of a long euro next year, short dollars on more Brexit, wheeling and dealing, short GPB, inflation surprising to the upside, possible short equities, rates higher, gold higher. And again, the classic trade, if you're trying to pay advantage of that for us, is just the core position of short bonds, short equities throughout the year. But, that's more for the weeklies, that's more technical. But here again, so on this Aussie, just keep in mind that even if you don't want to read too much into end of the year shenanigans, it's really important how we trade around this 200 into the beginning of the year. And keep in mind, again, we'll look at gold in a second, but the seasonals for all the metals into the beginning of the year. But especially if you're trying to hold short, market is making a series of higher highs and higher lows. So especially if we trade back above the 200 or we come back down and we catch bids, you really don't want to stay too stubbornly short here, right? You want to be a little bit cautious, right? So we'll have to see what happens, but clearly this has the potential to break to the upside, especially if it can hold above that 200. A lot of shorts are still going to be banking on this 200 and these highs into the 81s as an opportunity to give them an asymmetric short to continue this breakdown lower, looking at this just as a retracement. So there'll clearly be an awful lot of interest to get back short here. But keep in mind, it's not an area where you want to stay stubborn, because if we can manage to take this level out, then most likely there's very little to hold it back all the way back into the 90s. Does that make sense? So it's going to be, it's going to be interesting to see how we trade. But also keep in mind that in terms of January, January in terms of seasonals, is a good month for silver, is a good month for gold, for the metals in general, right? Speaking of which, right? Speaking of gold, this was a very pretty classic trade for us, and we've been looking at this a lot, and it's been a really decent trade all these years. Essentially, it's getting long the day before the last Fed meeting of the year, right? And you've seen this if you go back on your charts. Let's see if we can do this quickly. You can see here basically in terms of going into that last Fed meeting on gold, you tend to see this also line up with January seasonality when you're getting nice little pops higher, right? And exactly same thing happened this year. So this trade is in play and working out quite nicely. So this is just the reversal the day before the last the rate meeting this year, and we're moving higher. So again, gold, this has been a beautiful little run, similar on silver. Now, what you want to watch going into the beginning of the year is that a lot of people are going to be banking on the fact that this is just an end of the year run up, and they still want to get short. But ultimately, I'd be very, very cautious to stay short here, especially if we can't trade back below, this whole support zone. I think any move back here, similar to that Aussie that holds, is still in play for the rotation higher. Our base case ultimately, once we initiated these trades, is that we're going to be long all the way through January. So we expect to see a move into the high 1300s, possibly 1350. We'll have to see how this trades. But again, it's clearly got momentum. Watch out how we trade at the beginning of the year, and especially if equities do sell off a little bit at the beginning of the year, if we get any kind of risk off event, especially with gold trading like this with wind in its sails, it could really accelerate, catching a lot of people off guard. So again, very nice move on gold, but it pays to pay attention to these seasonal patterns and these things, because it doesn't mean they have to happen, but especially on these reversals ahead of all these FOMC meetings, it's giving you very, very nice asymmetric risk reward opportunities to play these charts. So it's been quite interesting. What else have we got? Yeah, sure. That seems only fitting, right? We've gone through Aussie, gold, and it only seems fitting that we look at Kiwi, right? So what's happening on Kiwi? Let's see if this is going to load the chart. So this has been another funky chart, because it's been essentially, is the way we look at it, range bound all year. I know a lot of people are going to disagree, but our base case is just being that we had 74.80s high range, and this is a chart that's been on the blog for a long time, right? All these open access stuff. So 71.50s mid, and 68s being the line in the sand. And we talked about these 68s, right? That they were weakening, but until level breaks, it's valid, right? So our base case the whole year has been the opportunities have been to try and get long on approach to 68s for bounces, and try to get shorts on approach to 74.50s, 80s. For essentially a flat year, kind of, right? And you see we're closing the year fairly flat here in terms of this mid-range. We actually opened the year. Where did we open the year? We opened the year about here, right? So essentially not an awful lot is going on. I think here you could make a pretty good case both to the short side and maybe even to the long side. We really have no opinion. Our base case is still that it's stuck inside the range, and we'll continue to focus on the range. We think the more interesting opportunities, whether it's to fade the range or play for the breakout, it doesn't matter, but the most interesting opportunities are at the range extremes, not necessarily in the middle of the range. So there are a lot of other charts we'd prefer to focus on, but here clearly it looks like, same as the gold, same as the Aussie, it looks like we're still got a little bit room to run to the upside. So yeah. Would you mind looking at Euro JPY? Absolutely not. We're here to look at whatever anybody wants to look at. So do you have a specific question on Euro JPY? So here, Euro JPY, we're pretty much breaking out of a range, right? And we talked about these in the weekly a lot, right? And basically, it's very similar, Andy, to that to the discussion we just had on Kiwi, right? Most of the year, right, or at least the back end, we've had a lot of interesting opportunities to play for the market to stay inside this range, right? So getting short into the 134.50s and getting long into the 131.50s. So here, as long as it's breaking higher, there's very little edge, in our opinion, to try and get short. If anything, you're either sidelined or you're trying to play for a breakout to the upside. Should we fail, especially at the beginning of the year, right, and we start trading back below the 134.50s, then we think it's probably an interesting play to try and play for a move back into at least mid-range, which is these 133s, right? If you're looking at it from a weekly, you see it's still trying to break out here. This is really not a chart we're huge fans of trading, simply because on paper we'd be euro bullish, but because of the discussion we had earlier on with potentially volatility picking up a little bit of risk off, this is going to likely suffer a little bit. So it's not such a pure play, right? So I think if you wanted to trade long yen USD JPY is long yen or short yen USD JPY is a much purer play. Or if you wanted to trade long euro or short euro, we think that euro USD is a much purer play, right? So that's why we're not huge fans of this unless you're really focusing on it intraday. But we think if you're looking at it more of a structural or swing trade, there are a lot of purer plays out there. GPB, JPY. So here we are, and again, it's you see how it's a fairly similar kind of chart, right? The only problem on GBP JPY is that you've got the added risk of Brexit shenanigans. So this is another one which we personally wouldn't be too interested in playing. I think if you're trying to play yen structurally, USD JPY is a much better trade. If you're trying to trade GPB, cable is a much purer trade. Here, if you're just looking at the chart mechanically or factually here, it looks like it's trying to break out. It hasn't broken out in the same way EJ's broken out. So I think if we get daily closes back above this level here, you would expect it to try and accelerate back towards this 200 on the weekly, back towards the 160 mark. And if it fails, you'd expect it to come right back down into the 149s. But I think it's a very messy chart, and it's not something I would be too interested in trading. Right, it's not something I would be too interested in trading. I think there's there are a lot of less cluttered charts out there. So I don't know if that answers your question. Hey Dan, how's it going? If it doesn't, let me know and I can elaborate on anything you want me to look at. Yeah, sure. I think where is it? Let me try and find it. What's going on the NASDAQ here? I mean, the NASDAQ, if you look at the NQ, and again, it's tricky to read too much towards the back of the year. You know, this could also be rebalancing, but clearly you've seen a drift lower, a lot of negative closes here, right, into the back end of the year. You really have to see how we open next year, but clearly this is an interesting zone or an interesting level simply because we're moving back up into, you know, you can call it essentially these highs here, right? So as long as it doesn't trade back below this level, you know, it could just be a little bit of a dip to then try and rally again. I think ultimately what's far more interesting, and in the same way we've been talking about it on all the tech names, is to focus on the 50 DMA, right? And I think as long as we hold above the 50 DMA, it could just be a little retracement to just power back off that 50. If we get a daily close, the 50 DMA, then I think there's clearly potential to accelerate lower, and I wouldn't be surprised to see us trading back into the 6,000. Yeah, I think, as we mentioned before, you know, in terms of the VIX, right, the question is on how do you know if it's going to get ugly? Well, if it gets ugly to the downside, you'll know, you can see, you know, if stuff isn't catching a bid, if it's in puke mode, you'll see it. Don't worry. You'll recognize it. But to give you a quick guide, you know, all these people calling about for panic on VIX, etc. You know, unless you see the VIX up something like, in terms of the discussion and the articles you've seen about, you know, the record short volatility positions, etc., unless you really see the VIX up 70, 80, 90, 100% on a day, it'll likely get sold, right? So it'll still be fairly orderly. Now, if you see VIX up on the day over 70, over 80, over 90%, then stuff can get funky. But if you don't get that, it'll likely just get smacked right down. But I think that the 50 is an interesting area to look at across the board, especially in this kind of context. Yeah, sure, here it is. So what's happening on cable? Well, cable, with all the talk about gloom and the end of the world on Brexit, all things being equal, cables behaving fairly orderly, right? Now, this is also a tricky thing when you look at the charts in hindsight, because it looks fairly orderly here, but really if you were trading intraday, you had a lot of silly moves because of the headline risk. So I still think, well, put it this way, I'm an extremely active trader, and I think for the better part of the past, maybe 5 to 10 years, the GBP USD, so cables being one of the pairs I trade the most. And I think this year has definitely been the year, I would probably say in my whole full-time trading career, definitely in the last, since 2008, 2007, right? Where I've put in the least amount of trades on GPB cable or any GPB related trades, pairs, simply because of not wanting to get chopped up, right? So here, not an awful lot is happening. We just it looks like we're stuck inside this 132.50 to 138.50, whatever you want to call it, area. And the market is waiting to see if we're going to get panic or no panic, right? I still think the market is not pricing in the real risk of what the whole Brexit means, but until it happens, there's not necessarily need to do anything right here. So look at it on the weekly. Looks like the best trade this year has been to fade the headlines pretty much, but on the weekly, essentially what's happened, we had the big puke through all the Brexit. And essentially now we've just spent the better part of this low in 206 slowly trying to climb higher, right? So if you lived every single day, hey, Tiamat, how's it going? If you live through this every single day, probably the feeling you get from the news and the media is, oh, GPB is dying, Brexit is crazy, everything's going down the drain, companies are leaving the UK, the banks are domiciling, etc. But essentially, since this panic low, the market has been, it's just a fact, the market has been slowly making a series of higher highs and higher lows and recuperating this whole puke off the 138 level. So is this uber bullish? I don't think so. Is it uber bearish? I don't think so either. I think it's just very, very choppy. Now, I think why we've got it drawn up this way is if we trade through these highs, I think there's probably money to be made trying to play for a strong squeeze basically through the 138, 138.50 all the way back into this 200, possibly even higher. I think this could be a quick trade. And equally, if on any day, every given day, we trade back below the 132.50 through this 100 on the weekly, I think there's probably quick money to be made to the downside into the 128. Now, if I had to look at it in terms of gut feel, in terms of how things would develop, I think I can make a pretty good case for this catching a lot of people off guard and ripping higher. And I think I can make a very good case for things catching the most recent price action off guard and puking hard. So I'm going to try and keep gut feel or emotions, everything out of this, and either be very, very tactical intraday, but most likely I'm not going to trade this a lot. But I'll be very interested to see if we trade through the 132.50s or 130, and here look to try and make some money on the acceleration outside of this zone. At least that's how I'd be looking at it. I mean, if I had to play for a structural move, I'd much rather play it through Euro GPB, being long Euro GPB through next year. But again, I'm not a huge fan of being too aggressive on GPB in general here. I think they're far clearer charts. Yeah, exactly, Debbie. You know, you've seen for all the bad press we've seen on Europe and on the UK, it's been a fairly decent year, both for Euro and for cable, right? So, you know, this is, you know, everybody looking for the world to end with Brexit. And as we said, off these lows into 2017, right? This has been a decent move, right? Because even if you look at it just from the start of the year, where we're closing here, cable's up, you know, 12%. Not too shabby, right? And if you're looking again to the short euro, short the world, euro is a mess, euro has to die crowd, they're not sitting too pretty either, right? Because basically euro is up 15% on the year, right, Debbie? So, and as we said, if you remember, we also had this last year. We had the same discussion in the sessions and in the update. The most interesting trade last year, the most asymmetric opportunity was the long euro, right? Was that, if you remember, Debbie, we had going into December 2016, our two core trades were long euro, long gold, right? Up through that FOMC meeting at the end of the year. So, you know, all things being equal, things have played out quite nicely. And again, all these trades, they look so, yeah, perspective is key because it all looks so clear in hindsight when you're looking through the charts, but it's far from clear when you're stuck in the heat of it throughout the year, right? It doesn't look that clear at all, right? It's not always easy, but that you know, that's part of trading. Yeah, I mean, here again, there's no trades. I'm not trading today. Today is not a day to be trading actively, right? This is really not a day to be trading actively. And if you're shenanigans, you can get slippage, you could get silly moves, very low liquidity. It's a day to let the professionals rebalance or close the year, do whatever they have to do, right? Here on CAD, what's going on CAD? Well, if you look at it on a shorter term perspective here on this 4-hour chart, Dan, it looks like it's trying to base here ahead of the 125. Looks like this level is being protected, so you could easily see a little bit of a bounce here. But essentially, if you look at the bigger picture going on this chart is we had a fairly heavy break of those 128s, right? And the levels we've been looking at this, again, for most of the year have been 130 to the upside, 125 to the downside, and 128, right? And you've seen a lot of opportunities to play throughout the year on a much tighter range. But here, structurally, you see how aggressive this break has been. So right now, the shorts are in control, right? And we'll look at the DXY in a second. The shorts are in control. Shorter term, it looks like the 125 is being defended, and we could see a little bit of a bounce. But I wouldn't be surprised to see sells coming in to ultimately try and break through that 125. If you look at it on the weekly, see how it's kind of like such a tight range. You've got this 100, you've got the 50 coming in, and you've got the 100 coming here, right? And you see this on a lot of these charts, which what's been happening this year is that essentially you've had moves, but stuff is kind of getting tighter and tighter and tighter inside, especially if you look at the weeklies, this like 200, 100 weekly moving averages just waiting for the breakout. And I have a feeling a lot of people were looking for some serious breaks this year, and most probably we would have needed to see that volatility really pick up across the board, and we never saw that. So I just think it's a little bit of a rain check for 2018. We'll see these moves come in 2018, right? And all these are essentially, right, DXY moves. So let's look at the DXY. So here, ultimately on the DXY, what's happening? Well, you see that we've had this. We talked about this a lot, but basically we consider this failed break above the 100. Our base case was that we were going to come right back down after this failed break and retest these lows, right? We came through and we accelerated through the 200 and through to those lows. And at that point we said, ooh, this has the potential to look fairly ugly. If it can hold below, this could really accelerate hardcore to the downside. It needs to stabilize. And what happened? Essentially, it stabilized, right? It stabilized. It's still heavy because if you look at the move we have basically off these highs all the way into these lows, what is this, probably 23, or it didn't even make it back to a 50 retracement, right? Let me see if we can, okay, here we go. 23, 38. So you see what happened. We didn't even make it to this 38. We got smacked down straight away. So it looks like this is trying to move down in extensions, right? So essentially, let me just see if I can get this off because I don't like having these 23 and the 38 on the chart. So essentially what this is pointing to is that unless the bulls can catch this pronto, and we'll have to see how we stabilize through the beginning of the year. If the bulls can't catch this pronto and stabilize it back above the 200 and we trade through these lows, our base case is that the short-term high is in for the DXY and it's going to be making its way back into 87.20s. So very heavy. And again, those would have those implications for Aussie higher, Kiwi higher, Euro higher, CAD lower. It's still not really accelerating, but it is looking heavy. It is looking heavy. For this to stabilize next year, we need to see it trading back above the 95s. If not, our base case is still going to be that it's heavy. Now, yeah, sure, we went through that. Our base case on Euro hasn't really changed. You can go back on the blog and we've talked about it a lot. Our base case is still that we are in the process of putting in a very big rotation off the 104.50s, breaking this downside trend, and we're coming all the way back through 126s, possibly higher, right? We came back down. All the, those lows into 2015, and essentially we've been going nowhere, right? So for this move to have legs and continue strong, our base case was that this sideways consolidation or chop and had to hold and ultimately break down from here for this to be pure-ish, right? The fact that we've broken higher, what's happening is we've made it through the opposite side, we've come back and we've based previous resistance, acting as support. The 200 on the weekly is acting as support. And as long as this holds, let me just clear this up because it's getting a little bit messy. As long as this holds, The market is going to the very least try and take out this level, and if it can clear that level, then the next stop is into the descending trend line, into the 126s, and then we'll have to decide what happens. So that hasn't changed really, right? Yeah, I mean, all those, Tim, on all those, our base case is through basically before the last rate hike on the Wednesday was long a basket of metals, right, and short the dollar through into January, right? So again, if you look at also if you look at the seasonalities for you, you have to keep in mind that. For the trades you've got on, those should all be good, right? Simply because, January is fairly bullish seasonal for all the metals. You have to be careful on some of the on some of the others. I'm not sure what you're still focusing on or what trades you still have on because we haven't spoken in a while. But exactly, yeah, we tend to be fairly bullish at the very least all of the metals. Okay, I mean, let me pop DBA here. Why isn't this working? And again, a lot's going to depend on what you're focusing on. I remember you're focusing on wheat and stuff like that. Remember, wheat seasonality is not great in January, right? So it's very different to the metals. So here, if you're looking at DBA, well, you've seen it it's been getting clobbered, right? It's been getting clobbered, even if you look at the monthly. So we think, if anything, being contrarian, we like to look at this to the long side. I think there's some clearer trades on some of the specific instruments rather than looking at it through DBA. But you see here, this could easily be holding the downtrend, right? It's had a fairly nice move here, so I would be cautious about trying to get aggressively long here because we've had a nice 3+% pop. So we'll have to see how this trades. Ideally, we get a little bit of a sell-off here. We come back down and it holds this level to continue to move back into the 19s. But I think the metals are a far purer play than DBA, especially if you're looking to play the seasonals. The metals are much better than something like DBA. So since you're in the room, let's look at the bonds. And yeah, it's decent trade down. So here the bonds are going to be interesting to see how we trade next year. Clearly, I think this is one of the most interesting charts out there. We've been talking about this for a long time, especially J and K, right? But here, to show you how tricky it's been, Tiaman, right? You see how we're still stuck? And this has been the problem all year, right? We've been looking for some kind of an aggressive breakout and volatility to pick up, and we've gotten no joy, right? Essentially no joy, because every time you think it's going to break out to the upside, it gets smacked down. Every time you think it's going to break to the downside, it gets smacked down. So there's, we're inside a box, which is inside the other box. So we're still going to maintain the same thing unless we get through the bigger box. It's going to be a really painful instrument to want to be very aggressive on, unless you're trading it off, hedging it with something else, right? And equal, I think this is going to be another year. For me, it's just a rain check, right? Just a rain check, delayed. Also, if you're looking at the Bund here, it's the same thing. We've been stuck here, but it's very hard to understand, in our humble opinion, why anybody in their right mind would want to be buying Bunds, right? So we still think we're going to see an awful lot of choppy trade. We still think any aggressive push to the upside is an interesting place to look for shorts, and we'd still expect these lows to be taken out next year. And as price is starting to coil here, we think the break below this zone will potentially be ripe for a very, very aggressive move, ideally as VIX goes berserk. Right? That's if we had to ask for our what we want for Christmas gift next year. We want the VIX to go berserk, and we want equities and bonds to go berserk, and to get some real movement in the market, right? That's on our wish list. Are you talking about North Korea sanctions and cryptos? Yeah, I mean, I have no idea really. It's just, I think it's such a huge topic, and it's very easy to have an opinion, Debbie, but I think we really don't know. Probably. If I had to guess, probably. But I think I'm not expert enough to discuss the whole, to give you, I don't think my opinion is worth really sharing on the whole sanctions. If they can get around the sanctions using cryptos, probably, but I think it's so complex. My opinion's probably more interesting on the charts than that. I haven't thought about it that much, to be honest. But probably my guess would be yes. Any other chart anybody wants to go through? Again, nothing's off the table. Yeah, on your comment, I think, a lot of the moves this year have been, they just look extremely clear, right? But that's one of the problems we face with trading in general, right? And that's one of the problems faced with back testing or paper trading to a certain extent, is that when you look back at charts, when you look back at action, when you have no position on in a static environment, when the chart isn't live, without factoring in the context, and especially without factoring in your trade plan or your trade size, everything looks easy, right? Stuff gets a little bit more complex when you try and trade it, because then you get into the mechanics of the trade, the execution of the trade, managing emotions in a live environment, and that opens up a whole other can of worms. But I would agree entirely, the moves, they seem fairly clear, but I would argue most charts look fairly clear in hindsight. Most things look fairly clear in hindsight, right? Sure. Yeah, that's what we do essentially in the weekly sessions, right? We just try and go through this, but in a live environment, because that's where it counts, right? Facebook, yeah, Facebook, to me, stranger things have happened, but again, 2018 for me is the year where we're going to get a decent correction on Facebook, on Amazon, on Apple, on all these names, right? And here, I like this. For me, I can't remember if you were in the session when we discussed it the first time, but our base case was, I don't even know if it may even be marked up here. Yeah. Again, this is from the week, but this was our trade on Facebook, Tiamat, right? We're already bearish, right? We're just looking for an excuse. And the base case here was that short with, essentially 1% risk on the trade, looking for that bigger correction to come into the 153s. So that's a fairly decent shot, right? Risk 1 to make 15, 16. That's the, again, I don't like to talk about specific trades in these, but that was our trade. So essentially here, expect to see very choppy sailing here inside the 50 and the 100. But, essentially it's looking, ideally we get a decent correction. It's the same thing in Apple. What can't be factored, what surprise to the upside can there be here on Apple? I have no idea, right? Unless they announce Tim Cook as a robot, or he's the reincarnation of Steve Jobs and he was just hiding and now Steve Jobs is going to be beamed back. I have no idea. But, essentially you think it's about time they correct a little bit. So it's the same thing here on the puke down here. Any rally was a sale for the move back down. The only problem on Apple is that it moved a lot here, so it's really tricky to get a position on with a tight risk. That's the problem on Apple, right? It's really tricky to get a decent trade on with tight risk. Thanks, Debbie. Again, in terms of AUD, Euro AUD, Euro NZD, I would, if I can give you a piece of advice, or scrap the piece of advice, I'll just give you my 2 cents, right? Whether you want to see it as advice or not, is I would not have an opinion on Euro AUD just because I have an opinion on Euro USD or AUD USD. So just because I have an opinion on Euro or Aussie doesn't mean that opinion has to translate into Euro AUD, right? What I would say is that it always makes sense to just look at every chart individually and apply whatever trade setup or whatever system you're trying to look at to the specific chart, and try and check your bias at the door, and don't think it has to do something because something else has to do something, right? Ultimately, they will be connected, but just focus on the chart independently, right? So let's go back on this and look at this on the weekly. I don't trade these in as a term of endearment. I call these the funny charts. I don't trade, I don't look, I don't like all these weirdo charts. I know people are going to get offended, but I like to look at the majors. I think you get a lot of crossfires in some of these funky pairs, exotic pairs. A lot of people say they like them because they move a lot, but remember, they move a lot both in your favor but also against you if you're wrong. And they tend to be charts that have a lot of wicks and have a lot of funky action. And that tends to mean not as easy to play, or not as pure, or not as technical to the level, right? So here, if you're looking at it, everything would point to it struggling a little bit here and maybe wanting to come back into this zone. I don't know if you have a specific trade you're looking at, but I would say as long as these highs hold, you'd expect it to try and come back down here to a little bit more neutral and then it'll have to decide. But for us, it's kind of like CHF JPY, affectionately we call it dog against dog. It's just like, it's you've got a currency pair where the SMB is dying to keep a weak franc, and you've got the BOJ dying to keep a weak yen. So much rather play them against something else, one of the majors, right? So it's not something we look at, or we focus on that much. And if you look at the charts, they tend to be choppier and a lot more congested. So if you have, going back to your original question, if you have a view on Euro or on Aussie, we'd always say it makes sense to try and express that through one of the majors most of the time, right? If you're just trading the chart, then it doesn't matter what your view on one currency or the other is. Just trade the chart, just trade the levels. Okay? Exactly. Any comments, any questions? Sorry, just had to have a drink. We've been going on for about an hour. So, hey, have an awesome one, Debbie. Have a great New Year's Eve. Please don't stop sending me the funky stuff. I won't stop with the silly comments. Okay, so any comments, any questions? Yeah, sure. Since we're live, why not? I like your question. So the question is, since we're live, can we look at the short-term action on NASDAQ here? And again, don't hesitate. Any question, I really don't mind. This is my just paying it forward. So have some time to kill. So I'm more than happy to look at any chart or any question anybody may have. Don't want to make it too long because it's going to be a pain to upload to YouTube. But here, so what's happening on the NASDAQ? So you see here, again, let's pretend it's not the end of the year, right? Let's pretend it's not the end of the year. But essentially, it's not looking, it's not essentially looking pretty, right? So we've had this market trying to stall, right? And then all of a sudden we had this big puke, right? Sorry, this big ramp. What do we know from looking at these things day in, day out? What do we know? Well, we know that usually all these low volume moves, especially when they happen in the overnight action, et cetera, the market tends to give them back, right? Usually when the volume comes back in, but the market tends to give these moves back. So, and what it's done essentially is it's given it back. Now, if you go back, if you look at this even on a daily, right? See here, this whole ramp, right, is just the peanuts vol ramp, right? And then we've continued to ramp up on lower and lower and lower volume. So you'd expect the market to give this all back once the volume comes in, but here it just seems to be end of year. Now, whether it's because we've been up so much the whole year and this is just a little bit of rebalancing, who knows? But essentially, it's not surprising that we're giving this move up, right? Equally, because of the low volume today, you wouldn't be surprised if they tried to jack them up higher, right? Especially early in the day, they tried to go for that 25,000 on the YM and the 2,700 on the ES. They could still try and do that later on in the day, but here essentially it's don't read too much into it. The volume is anemic, right? Which has been like this for most here. But here it really looks like it's trying to come back down. But as we said before, what's interesting is what will happen around the 50 DMA, not so much what happens here for now, right? Yeah, exactly. I mean, what's happening on yen? This is another one, right? We've been talking about, it just feels like we've been talking about this 112 area for more than I can remember. And essentially, it's another good example of what the year's been like, right? Essentially, 2017, right? Unable to get traction above the 114.50 and really unable to get real traction below the 109.50, if you want to call it 108.50, whatever. So we've just been stuck. So you really have to, we really have to wait to see. So it shouldn't be surprised that nothing globally is moving, because you see how everything's been fairly range bound, especially with yen, especially with the bonds, right? But what is moving is gold, euro. So, and especially if they can pick up that could be what forces the move ultimately when it comes, right? Yeah, I mean, keep in mind that a lot of people are going to be focused on how we trade at the beginning of the year. Now, your comment, you expect the NASDAQ to trade significantly lower within the next few sessions. I mean, I couldn't disagree with you, but I would have to say that we've been looking for that for most of the year. So we've been wrong for pretty much most of the year, looking for that VIX to pick up and looking for the NASDAQ to pick up. So it'll happen sooner or later. Just remember, it could take a lot longer to happen than what we think, but the longer it takes, the more violent the correction will be, right? As you know. So we'll have to wait and see, but clearly, I would not be surprised to see us trading that 6,000 fairly quickly. Yeah, I mean, look at it this way. An easy way to do it is assume we close the year around here, right? And equities have a positive drift of something like 7 to 8%. Just do something very easy. Just go 8 to the upside, and 8-ish to the downside, right? And say all things being equal, in some kind of a normal world, right? This is gonna be your range for next year. Right? It's fairly simplistic, but I bet you if you go back over the years and do it, it's fairly accurate, right? And that's in a normal. Then if it's not normal, then you could get a serious correction. But I think here, what is going to be very, very interesting is as we go into the beginning of the year, what happens when we start getting a little bit of selling, because we haven't got any selling and we haven't got any real participation. But the real problem is we haven't seen any real participation either side. So don't be surprised if you get another final puke to the rip to the upside too on decent vol, because we really haven't seen decent vol all year round, right? So yeah, exactly. The focus is not on being right or being wrong. The focus is on surviving when you're wrong and making as much as you can when you're right. Exactly. Yeah, here, this is another one that's been fairly clear on the year, even despite all the geopolitical risk and the headline risk. but it's been a tricky one. Intraday is on crude, right? And I think bar any serious geopolitical tension or something silly happening, I would expect, famous last words, I would expect 65-ish to cap. And bar anything stupid on equities, geopolitical, whatever happening, I wouldn't be surprised to see this 50s 45 cap to the downside. I still think we need to see something significant happen, if not for the reasons we've discussed, because of the shale production coming on at higher prices and OPEC panicking at lower prices. Ultimately, we'll see some kind of price being contained here. So going into the year, we'd be more looking for shorts in this area and looking for longs in this area unless something significantly changes. But it's been a tricky one. It's been a tricky one. I expected a much easier short off the last OPEC meeting, the same we got earlier in the year, which didn't materialize. But again, we've had all that funky year-end action and the geopolitical wheeling and dealing, so it's been a really tricky one to trade or to hold on any serious swing. Okay? Exactly. So guys, we've been going on for about an hour and 10 minutes or so. I don't want the recording to be super long. It's going to be a pain for people to go through anyways. I want to wish everybody an awesome rest of the year, a couple of days left. I'd like to wish you all the health in the world to you and your families. Happiness wouldn't be bad. Wealth is probably would not be bad, but it's the last thing. Health for everybody is the most important thing. Thank you so much for the banter on Twitter throughout the year. Thank you for all the guys that, despite the fact that it's a lost art, continue to share and retweet all the content, YouTube and the posts you like. It's always very much appreciated. Always gives a good feeling and makes you want to do a little bit more. So again, thank you so much. It's been another year's gone by. It's been ages. And I think probably going into the 10th year doing this on Twitter. Hopefully there'll be many, many, many more. And again, have an awesome one. Thank you guys so much. And talk to you guys soon. See you guys soon. Take care. Bye-bye, guys.